Hi, welcome everyone to today's session of 20 for 20 in 2020, which you know is a series that I have begun to introduce you to professionals who you may wish to go to when you are thinking about the important decisions you're going to make in your life. As you go through this process, you want to hear more about them and learn how to make these decisions about these important people in your life. So for those of you that aren't familiar with this series, I'm Ellen Newman, and I am a trusted insurance advisor with the Norton Advisory Group, and I help people make effective solutions for planning their estates, their business succession, retirement, and long-term care concerns using insurance strategies. And I would look forward to speaking with you and telling you more about that. I have some complimentary offers to tell you about at the end of this session. But right now, I'd like to introduce you to a very special person, Carin Pai, who is an executive VP with the Fiduciary Trust Company International and heads up their portfolio management and investment strategy group. And I know Carin for many years because we actually worked together when I was a managing director at Fiduciary Trust Company International. And when I came across a client that needed investment guidance and advice, she was definitely my go-to person. And the experience was always very positive for all concerned. And so I've asked her to be our guest today. So how are you doing today, Carin, in these difficult pandemic times?
Hi, Ella. Thank you so much for having me, and it's really great to see you. You know what? I think everyone's learning to adjust in this environment, but we're doing really well. Family's doing well. My boys are, adapting and managing through these times. Generally, I have no complaints.
Terrific. Okay, with that, we're going to get started on our 20 questions. The first question is, what is the primary focus of your role?
Yes, so in my role, I am responsible for developing equity strategy for client portfolios. And I also manage the team of portfolio managers who are essentially advisors and investment managers for primarily high net worth clients. But also, we do manage some foundation money as well. In my role, I am looking at equity markets, looking at macro, market conditions, and devising strategy from asset allocation to also solutions that meet our client needs and long-term objectives.
That makes a lot of sense. That's so focused and important. What led you to this career path?
Well, it's surprising, but it's been a long career. I have been with Fiduciary for 24 years now. I started my career at Prudential Securities, which was a great foundation into this business as I started, in the research side. I did equity research. I was actually involved in client portfolio management at that time, talking to clients about specific stock ideas. And this was in the 90s. So it was sort of a very exciting time for equity markets. And so it sort of really solidified my interest in not only the markets, but really in working with people and developing relationships. I've been a portfolio manager since the late 90s, early 2000s, and have been the head of equities at Fiduciary for the past 7 years. And I think that part of what I really love about my job is not only, the markets are ever changing, things are different every day, you learn something new every day, but it's also the work that we do for clients it's very meaningful. We get to know and build relationships and really help families, whether it's with their portfolio, with their finances, or even just educating their children, right, and working with multi-generational families. I think that's the part that makes the markets and investments tangible. So that's really kind of I think what I love about my job. But in terms of how I got into, or what sort of led me to where I am today, I would say that certainly a lot of good people that I've worked with. I think you need good mentors in the business along the way. And in addition to getting my degree in sort of business, I also have a chartered financial analyst designation. So that's also something that I would encourage anyone interested in the field to to go for.
Right, right. I remember when I went for my MBA in finance, my one of my advisors was encouraging me to do that, but I didn't particularly pick that route. So I know how challenging and difficult that can be to get, but worthwhile. In any case, what would you say? You've already covered some of this, but I was going to talk about some of the highlights of your career experience.
Yeah, highlights. So I think certainly uh, one of the highlights is actually being in a position of leadership, right? And when I became uh, when I was sort of asked to lead the equity group and the team of portfolio managers, I think kind of going through difficult periods in markets certainly is one that you gain a lot of experience from. I would say that this year has been, certainly memorable, and maybe even a highlight in terms of what we've been able to accomplish, what I've been able to accomplish this year in terms of having very, very strong investment results in challenging markets, holding clients' hands kind of through a very uncertain period in the markets, and coming out, from this period with performance that is way above the markets this year.
That's
So we're very proud of that.
That's very impressive. I really think that says a great deal about your skills and your capabilities. That's fantastic, because certainly a lot of people have been concerned about what's been going on. You talked a little bit about the types of clients you tend to work with. Can you elaborate on that a little further, like maybe what industries or backgrounds they have, or what percentage you might say are high net worth, or other types of what type of clients would you say they are for the most part?
Sure. I would say we have a very diverse group of clients, all different industries represented in our client base. I think, we have, as I mentioned, most of our clients are multi-generational, meaning that, we've worked with the grandparents, we work with the current generation, we work with, the next, the children and the great grandchildren. So it's, I would say a large part of our business is really involving these families of multiple generations. I would say that we have clients that are in the finance industry, in the healthcare industry. We have executives, as part of our client mix from all sorts of industries, and we have a lot of. I think what's interesting is that we are getting more and more of the younger clients involved, which is great because they have a different perspective, they have different questions. And so, I think that's always great to be able to, make that connection to the next generation.
That's great. That's a good summary. And okay, now in terms of working with your clients, what are some of the problems and issues that you've been able to help them address?
um, Yes. So I think obviously our number one priority is making sure that our clients have enough wealth, right, and enough cash flow for those that need cash flow to meet their expenses and to meet their long-term goals. So the financial picture is obviously one of the utmost priority and the main thing that we focus on. But as part of achieving that goal, right, making sure that they have what they need from a wealth perspective, what we do is goes a lot farther, goes a lot further, than just investments. What we do includes working with clients and planning, doing estate and trust planning. We do work with clients to develop, financial plans that include tax planning. We often do work not only with clients, but we also can work with their advisors, like their accountants, or we would work in partnership with other consultants that they may already be engaged with, and we can be very flexible in terms of how we work with our clients. We could do sort of a part of their financial picture, or we could be, in many cases, providing their total holistic view of their finances, including their future estate and tax planning.
That's quite comprehensive, and that's very similar to the way my firm works as well. We work together with the advisors of the clients we help, and we partner with people like yourself, their accountants, their attorneys, because it's really a team effort when you're working with a specific client to create the total package that's appropriate for them and the results to help them reach their goals in the same way that you would do it. So that's very makes a lot of sense. This is a question I know, but people may want to ask when they're choosing a financial advisor. Do you consider yourself a fiduciary? And
Yes,
you act
absolutely.
in that behalf, right?
Yes, absolutely. I mean, it's in our name.
That's exactly right, which is something people don't understand. So maybe elaborate on what that means to the client, if you want
Sure,
to, or the
absolutely. I think it's a very important distinction. When we are working as fiduciaries for our clients, it means that we have to put our clients' interests first, and we have to represent our clients' interests. And that means all beneficiaries involved. So that's an important consideration. It means that we're not selling our clients products. I think that when we are making decisions for our clients, and it may involve solutions or products, we're making those decisions if we think that it's going to yield the best outcome for our clients. And I think that's really an important distinction that clients should be aware of, and it really means that they have someone that they can trust to really look out for them, and that our interests are aligned with theirs.
exactly. Does your firm work with a custodian, or do you do your own
Yes,
custodial work?
we do actually do custodial work. A good part of our business is actually being a custodian, but we also have other custodians that we work with when we're managing money. So we can work in partnership with other custodians as well.
Right. We talked a bit about your qualifications and about your CFA. Are there any other credentials that you wish to mention as well?
Well, I don't know. I certainly have hobbies. Maybe
Well,
that's something of
well,
interest. But
you have that
in terms,
Harvard. You went to Harvard though for a special degree,
oh
didn't you?
yeah, I did do continuing education at Harvard, which I personally would recommend that for anybody. I think it was one of the best experiences in my life. I think that so my I did actually uh, I completed a program for risk management in investment management. So it was a great experience because it included a network of people that were really in the business and in the field, where we shared a lot of our experiences, and we really delved into different topics within investment management, and how do we think about risk in portfolios. What are some of the tools that we use for risk management, including things that people might consider in the portfolio, like commodities. Of course, fixed income is a part of the portfolio that could be a risk mitigator. But what was interesting too is that a lot of times people are, don't always think about cash as a risk mitigator, but cash is a risk mitigator, and it's an important one, and one that probably has the least correlation. I mean, it has really no correlation to any other asset class. So it was, I think definitely something that was of great value to me.
Great. Thanks for sharing that. And
Mm-hmm.
that's why you and I know that even certain insurance strategies can be useful in those concepts of finding an alternative.
Yeah.
Now, in terms of activity to help your clients, do you help them with working on an actual investment plan? I think you mentioned that. And how do you go about finding the appropriate investment plan for them or creating that?
Mm-hmm. Yes, we do. So it for our clients is very important. For each client, it's very important to establish that plan, right? And it's good to establish that plan in the beginning when you're working with an advisor. And it's always good to revisit that plan at least annually, or whenever there's a change in circumstances,
Mhm.
whether it be personal circumstances like a divorce, or if there's a death in the family. But we actually have financial planners at Fiduciary Trust. We also have, relationship managers that can also think about, the trust and estate plan along with financials and taxes to devise a proper, wealth plan that includes setting up the right structures, what type of trust to set up to sort of maximize wealth transfer, and to maximize the assets, and how best to structure the assets so that it's the most tax efficient. So we do work with our clients to devise that plan, and then we make sure that the investment plan is aligned to achieve those financial plans. So we have software, and we have tools that help us do that. But I would say that it really comes down to the right people, like someone like yourself. I'm sure is very accustomed um, to developing relationships where you can understand your clients' needs and what their priorities are.
Absolutely. And that's so important to get that understanding of what is important to the client in order to help them get to where they want to get to.
Yeah.
Um, okay. So you've actually covered some of my next question, which is, do you provide formal updating, reviews, and maintenance programs for them?
Yes, we do. And we will certainly do an annual review at the minimum for our clients. I think it's always good to have that touch point, and to have that annual review, just to make sure that things haven't changed. And we do regular reporting for our clients. I think that we're also very flexible in working with our clients to customize and tailor reports that help them understand, what it is that they need to focus on. We also, work with many different types of clients, including large families, um, as well as individuals. So the range is very wide in terms of what the situations and what type of clients we have. So we do believe a great deal in terms of being able to customize and tailor things to our clients, and making it work in the way that they understand it.
Right. That's great. So I was going to also ask what it's like to work with you initially and in the long run, and you've sort of addressed that already. Anything you want to add to that?
Sure. One of the things I had mentioned earlier is that we have been seeing a wider range of, I think, interests from our clients. And, I think of our company as a company that's always up to date, right, and current in terms of uh, things that are developing, not only in the industry but what's affecting clients. One of the things that we have been able to do for many of our clients who have an interest in impact investing, we do have, a strong capability with our recent acquisition of Athena Capital this year,
Huh?
who brings an expertise in impact investing. ESG investing is something that we have been doing at Franklin and at Fiduciary, and that is the concept of incorporating environmental, social, and governance factors into our investment decisions. And on that front, what we found and what we believe in is that when we take these factors into consideration, we, along with, the fundamental analysis and financial considerations, that it oftentimes actually will be very much aligned with our focus to find high quality investments and strong companies that we want to invest in. So we do believe that actually it's a additive factor or feature to the investment process, whereby it does lead us to identify growth trends. It leads us to identify companies that are innovative and forward-looking, and also thinking about risk management as part of the decision making. So I think that that's something that we have been doing. We have been doing well, and we also have the expertise in it as well.
That sounds very important and makes sense in today's investment climate. Now, this is a more mundane question. How do you determine your fees and what do they include?
So generally our fees are as a percentage of assets, and it's on a tier schedule. We feel that this fee structure is aligned with our clients. So if our clients' assets are growing, we do well. And if our clients' assets are declining, which we certainly recognize that that's part of market reality, we also, our fees will also get affected. Our fees cover the wealth management and advice part of it, but it also covers investment management. And that includes, in terms of the wealth management aspect, it includes devising asset allocation strategy. It also includes when we are selecting managers or selecting funds for our clients. So it's really, our fees do cover a broad range, but our fee structure is also flexible to make sure that we're setting up a fee structure that makes sense for the clients in terms of the services that they need from us.
Right. Okay, that makes sense as well. And when you charge a percentage of the portfolio you're managing, if you're using an outside advisor that has a separate fee, does that get included or excluded from the strategy on the fee?
So it's a differentiated fee when we are managing the assets in-house, or if we are selecting a manager. So the fee to us will be lower when we're selecting a fund or an outside manager. It would be our wealth advisory fee as opposed to an investment management fee.
Right, that makes sense. Now, in terms of when you're working with your clients and creating and implementing a plan, how do you go about creating that plan and changing that plan? And you've mentioned some of that already. What would you add anything to that? How you go about working and creating a plan for an investment plan for your client and changing that plan over time?
Sure. So we're always monitoring, how the portfolio or the collective group of portfolios is doing for our clients. And in terms of rebalancing, we because most of our clients are taxable clients, we don't have an automatic rebalancing, program. We rebalance portfolios based on our tactical views of markets, and also based on our risk management, meaning that we want to make sure that portfolios, even as they say we've seen equities do well over the last few years, we've seen equity ratios in portfolios rise. We will look at the potential sort of tax cost of rebalancing to determine how much we should rebalance, and making sure that we're staying within the ranges, appropriate ranges for each of the asset classes for the client portfolio. And we'll stress test that in terms of returns and volatility to make sure that we're staying within range.
That sounds very effective. Now, in terms of what would you say your investment philosophy is? And is it yours or the firm's, or how does that work?
Well, I would say that my views and my philosophy is very much aligned with the firm, and I think that's one of the reasons I've been with Fiduciary for such a long time. I think first and foremost, we have the view and have a firm belief that we put our client interests first, and that we are looking at investments that are suitable and appropriate for our clients. I think that's first and foremost. And then within our investment selection, I would say that we do tend to have a quality bias, meaning that we would rather invest in something that is high quality, even if we have to pay up a little bit or pay a premium for that quality. We think it's worth it. We think it's gives us the flexibility to kind of ride through more difficult environments. And it's probably something that we can hold on to for a longer period of time. We have a belief in transparency, meaning that we want to really understand what we own, whether that's an equity, a bond in a company, that we have full transparency in terms of the individual holdings in our client portfolios. And we also have transparency into the managers that we select, or the funds that we select for our clients. We do a great deal of due diligence on the managers and funds that we use for our clients. We want to make sure that they also share the same philosophy with us, and in terms of quality and transparency. And I think we also have a belief in, from my standpoint, we are cognizant of valuation. So while we don't mind paying up for quality, we also want to make sure that we're not overpaying. And we do have a valuation discipline around our selection and around portfolio rebalancing exercises when it comes to asset allocation or security selection.
Great. So that's very, very helpful as well. Now, with your clients, do you address other issues such as tax consequences and the impact of taxes with on themselves and their portfolios?
Yes, we do. I think we manage taxes throughout the year, not just at year end.
Hmm.
We are, you know, thinking about tax loss harvesting throughout the year instead of just, waiting until November or December. I think you have to also take market considerations into those decisions when you think about taxes. I think investment decisions should come first, because ultimately if if you're right in your investment decision, it will oftentimes make up for the taxes. But you do want to take the tax considerations into the equation and look at things on an after-tax basis. That goes for not only the equity selection and the asset allocation rebalancing exercise, but it also goes into our approach to fixed income as well, and how we think about tax efficiency for clients and selecting the appropriate um, uh, fixed income strategy for our clients based on their tax rate, based on the states that they live in, or whether, of course, if we're dealing with a taxable entity or a tax defer or tax-free vehicle.
Hmm. Okay. Now, in terms, we talked a little bit about asset allocation. Is there any specific asset allocation that you generally work with, or is it more client specific?
Well, it's a framework that we have. Our asset allocation goes from, I think it's not too, atypical. I would say that we have asset allocation that ranges from a, very sort of conservative capital preservation approach to a high growth asset allocation strategy for clients that have much higher uh, growth expectations, but also higher risk tolerance. So we believe that each asset allocation mix should be commensurate with the amount of risk that the portfolio generates, and that's an important consideration for clients when they think about their strategic asset allocation. And we work with our clients to really help them decide and figure out what's the appropriate uh, asset allocation for their long-term objectives.
Right. Perfect. Now, in terms of measuring performance, do you use certain investment benchmarks? And if so, which ones do you tend to focus on?
Sure. It's So we think about the benchmark is very important. Benchmarks are actually, they should be a gauge, and they can also act as a guideline. I think that choosing the right benchmark is an important decision. So I think clients also need to think about their benchmark relative to what, obviously what they're trying to measure. So we want to make sure that, for example, when we're looking at the total portfolio, whereby there's an asset allocation decision or an asset allocation mix, that the benchmark for the total portfolio should represent more or less the asset allocation from a strategic standpoint. And then there should be appropriate benchmarks for equities, as well as an appropriate benchmark for the fixed income component, and of course, an appropriate benchmark for alternatives. So there's lots of different benchmarks, and you just want to make sure that you're measuring apples to apples. And typically our clients do oftentimes look at how the Dow is doing or how the S&P is doing, but it's important to remember that that's just potentially for a piece of their portfolio, right, or a segment of their portfolio, and not necessarily the total portfolio. I think a lot of times clients, might forget that in terms of, they're comparing their total portfolio to how the S&P is doing, but they need to think about whether their portfolio is 100% invested in equities or if that is their objective, or whether their objective is more of a balanced portfolio, and only a portion of their portfolio is invested in equities that should be compared to the S&P.
Right, that makes sense.
Mm-hmm.
That's a very good response. Now, if you were not available or out of the office to discuss a client's issues, is there someone who handles that for you when you're not around in your absence?
Oh, sure, absolutely. I mean, it's so important to make sure that there is support and that there is a team. So for myself, because I'm in a leadership position, there is there are other investment leaders at the firm that are sort of my colleagues and my peers, and can back me up from that perspective. As a portfolio manager, there is, typically portfolio managers work in a team construct as well. So there is usually another, portfolio manager, or even two as part of the team, along with, relationship managers, as well as support in terms of associates who also understand the client's portfolios and the client needs. So it's definitely a team approach.
Right, that's great. Okay, that brings us to our last question. What can you tell us about yourself that we would not find on the internet?
So I think I've done some other interviews. So there's some things that people might be able to find about me, like I am I am a fan of I do have hobbies, and I am a fan of golf and tennis. I'm very active. I like to, stay healthy, and make sure that I'm always constantly moving around. Yeah, I have two boys, who one's in middle school and one's in high school. So they are, they're definitely they keep me busy. But they're great boys. I I would say, I mean, I actually like, I'm a closet artist.
Ah, fascinating. I didn't know that.
Uh, uh,
What medium do you use? What kind
um,
of art?
well, I like to actually paint in acrylic, and dabble in that. I actually, so when I was younger, I had a lot of interest in that, but really, it's now it's a hobby for whenever I have time. Um, but yeah, I love painting. I think it's something pretty to look at, but it's also very therapeutic.
I totally agree because I happen to be a watercolor artist myself, so I totally
Ah.
relate to that. I didn't know that about you, Karen. That's fantastic. Well, this was wonderful. Now, would you take a minute to tell our audience how the best way to get in touch with you is, and what contact information they can use to reach out to you?
Oh, sure. So the best way to reach me is probably through email, just because we all operate in a mobile world, and I'm probably someone that uh, likes to get email as opposed to voice messages these days. So the best way, I think, is actually, and this is a good way to learn about the company as well as myself, is through Fiduciary's website. And also, my email address is cpai@ftci.com.
Perfect. That's great. Well, thank you so much for doing that. Now, I did promise everybody that at the end of the session, I would just talk about how I could do something special for them. And what I want to point out is that we are coming up to the end of the year. And in terms of their insurance holdings, this is an important time to review whatever insurance, life insurance holdings they have. And if they're using those for estate planning or business succession or long-term care, whatever it is, we offer a complimentary fiduciary review. And with interest rates so low, there are strategies to implement. It's also insurance companies are doing repricing of their products, and this could have an impact on what they currently hold. So it is important to have a professional take a look. So if you'd like me to do that for you, please go to or contact me through my email also at ella@nortonadvisorygroup.com, and also go to my website at Norton Advisory Group. And I'm happy to help you with those strategies and review what you currently have and make sure it's still appropriate for you, since things have been changing dramatically as a result of what's been going on in the economy and as a result of the election and things that are going to be changing in the near future. And in the meantime, I'm going to be posting this on LinkedIn, and we will be having more sessions of 20 for 20 in 2020. So please be on the lookout. And I want everyone to stay healthy and wish you a happy new year. And I want to thank you again, Carin, for doing this with me today.
Thank you, Ella. So nice speaking with you.
It's a pleasure to have you.
Thanks.